everyone. Welcome. You're watching Business Today TV. I'm Sakshi Batra and this is the earnings special edition. Our focus in this edition is on PNB Housing. The company's reported its earnings for Q4. On a standalone basis, we've seen that the net profit has grown 57% to 443 odd crore rupees for the company. The total income has rallied by 11% at 1806 crores. The interest income has also seen an improvement of 6.5% to 1683 crores. Even on the asset quality front, we have seen an improvement on the gross non-performing asset ratio. It's come down to 1.5% from 1.73% in the previous quarter. The net NPA has stood at 0.95% as compared to 1.14% in Q3 as well. Now, to discuss and to decode the insights from this quarter and the outlook going forward, I'm now joined by a very special person. The top management, the MD and the CEO of PNB Housing joins right in. Mr. Girish Kousgi is with us. Warm welcome to you, sir, on Business Today Television. Thanks for giving us your time. First up, congratulations. Good set of numbers coming in for this quarter. Do tell us at the outset what have been the key contributing factors for you?
Thank you so much, Sakshi. I think if you look at not just the quarter, for the whole year, I think PNB Housing has done pretty well. So we had a lot of things to talk about in last 1 year. We raised capital. We ran down the corporate book, which was 4,000 crores last year. Now it is only about 2,050 crores. GNP on corporate was about 23%. Now we have one small account, which is about 3%. And we are hopeful of resolving that in next few months. On the retail GNPA, it was 2.57% last March. Now we are at 1.45. And the growth, what we have shown on book on retail is about 14%, which is last 5-year high. And the disbursement, what we have done in Q4 is again, the highest in last 4 years. So I think a lot of things have happened in last 1 year. We also got the rating upgrade from AA to AA plus.
Yes.
We were able to avail 3,000 crores from NHB, which typically comes at a lower cost. So I think it's an overall development. And we also started affordable. We started actually 15 months back. We started affordable business. And in about 15 months time, we have built a book of about 1,800 crores. I think these are some of the things what happened in last 1 year. Of course, it had an effect and impact on Q4. And that is where we see what we see today.
Absolutely, sir. A lot of factors to consider which have gone perfect for you in this quarter and in this financial year as well. How would you really look forward to FY25? What could be the levers for you to further this growth on all the parameters, and what is your vision, sir?
So actually, in terms of profitable growth, we will try to strengthen our affordable segment and business. We have launched new vertical called as emerging markets, which we will start doing from this month onwards, which will come at a higher yield compared to prime. On the liability side, I think NHB 3,000 crores would play very well for us on the cost, and rating upgrade would also bring the cost down in next few quarters by few bips. Our growth guidance for FY25 is 17% on the retail book. With respect to corporate book, we will restart business in H2 of this year.
Okay. H2 of this year is what you will start. So how will you do it different this time around, sir? And how will things pan out for you on the corporate front?
On the corporate side, we would stick to fundamentals, basics. We would focus only on construction finance, select developers, select locations and projects, and we would focus on a lower ticket size. I think once we are ready with the business plan, maybe then I can share with you more details. But we'll be very cautious, and we want to build a good book on the corporate side as well. But our focus on corporate is going to be not very big. At any given point in time, in the overall mix, it will be less than 10%. As we speak, as of March, corporate is only about 3% and 97% is retail.
Right, sir. So also on the affordable housing, could you give us a little bit insight as to what is the outlook for FY25? What kind of a demand is what you're looking at right now? And how do you see disbursements for this one?
Of course, we started in last quarter of FY23. FY24 over 23, we've grown by 11 times. However, the base was very small. So now we have added 60 more branches between December to March. So now we will have 160 branches catering to affordable segment. Okay. So the growth is going to be very good in the affordable space. Both the
Oh,
affordable and emerging incrementally in FY25 should contribute to about 40 to 42% of total disbursements.
okay, got that. So apart from this, could you also give us your overall sense on what is the expectation on the cost of funds and the NIMs also going forward?
So if you look at total cost on the portfolio is 7.98%, and incrementally it is coming down. Now it is a little over 7.9. So with this rating upgrade, with improvement in all the performance metrics, we expect the cost of borrowing to go down in next few quarters. So in terms of margins, I think it will be around 3.5.
Okay.
And in terms of credit cost, for FY24, we had guided 60 bips. We ended the year with 25 bips. So guidance for FY25 credit cost would be 30 bips. And we also have a large pool of written off book, which is about
Yes.
2000 plus crore. So we are expecting good recovery in FY25.
Okay. So now on the asset quality, you did want to understand remarkable improvement on a year-on-year basis is what we have seen, and subsequently, of course, over the quarters too. What levels would be sustainable for you as far as GNPA and net NPA are concerned, and how would you really look at a more, acceptable level for you?
So on the GNPA at an enterprise level, we want to be somewhere around 1 to 1.1% and sustain at that level.
Okay. All right, got that. So also on the disbursements front, what could be the outlook as far as FY25 is concerned?
So we'll be able to grow at about 24-25% on the disbursement front. Book growth will be 17% because we are focusing more on affordable and emerging, and therefore we are focusing on profitable growth in book, and therefore the percentage is 17.
Okay. So could you also throw some light in terms of your emerging market strategy now in tier 2, tier 3 series now, as far as geographies which you will be now looking at targeting in terms of increasing your penetration in such areas?
So if you look at the total market, there are four segments: super prime, prime, emerging, and affordable. So we'll be present in prime, emerging, and affordable. The only segment where we would not be there is super prime, and that is more by design because that segment gives us lesser margin, and that is why we thought we should move towards more profitable segments. This year we launched emerging. We have earmarked 50 branches. It's a combination of both old as well as new set of branches, which we opened between December to March. So we will have 50 branches focusing on emerging segment, which is typically in tier 2 and tier 3 kind of towns, which can give us a better yield compared to prime.
Okay, well, thank you so much, sir, for speaking to us on business today and giving us all these wonderful insights from the quarter. Again, congratulations to you for a stellar set of numbers coming in and for the financial year. And all the very best for the upcoming quarters. We shall hope to catch up again very soon to understand more about the industry and for your business too. Many thanks, sir.
Thank you.
All right. With that, viewers, we will wrap up this very special conversation with Mr. Girish Kousgi, the MD and the CEO of PNB Housing, for giving us the insights into the quarterly numbers as well as an outlook going forward from here as well. Meanwhile, you stay tuned as we continue to get you more fascinating insights from various companies that are reporting earnings into Q4 and everything that's buzzing on the street too. Many thanks for tuning in.